What if the next big move in your portfolio didn't come from stocks, crypto, or real estate, but from a single ETF, one that claims to pay out over 140% annually in dividends? Yeah, it sounds insane. And yet, people are doing it, posting screenshots of $12,000 monthly income from something called MSTY, quitting jobs, living off payouts. It looks like a passive income paradise. But here's the flip side. Others are calling it a financial death trap. Some have watched their portfolios shrink faster than the dividends roll in. Others are borrowing against their homes to get in, and that's where this gets risky. Real risky. So what's the truth? Is MSTY a breakthrough tool for financial freedom? Or is it just smoke and mirrors wrapped in market hype? Hey, I'm Mike. This is Golden Goals, and in this video we're breaking down MSTY like no one else. I'm talking real numbers, real outcomes, and zero fluff. If you're in that 25 to 50 age range like me, building your future, growing your money, chasing stability, this is the kind of financial reality check you need before you chase yield over logic. Stay with me, because by the end of this video, you'll walk away knowing what MSTY actually is, how it pays those wild dividends, the risk that nobody's telling you, and whether it's the smartest move or your biggest regret. Let's start by asking the question on everyone's mind. Why is this ETF blowing up right now? And why are so many people risking everything to chase it? Why this ETF is going viral? The hype, the headlines, and the dream. If you've been anywhere near Reddit, YouTube, or finance TikTok lately, you've probably seen it. MSTY. It's not just trending, it's exploding. Why? Because it promises something that almost sounds too good to be true. 143% yield, paid monthly. For many, it's the holy grail. An ETF that claims to turn $100,000 into nearly $12,000 per month in income. That kind of number hits hard, especially in today's economy where rent is high, wages are flat, and most people are chasing financial freedom like it's a moving target. MSTY drops in like a shortcut. No tenants, no late-night crypto trading, just monthly payouts, predictable, juicy, and fast. People see the dream. Quit the 9-to-5, travel, pay off debt, fire your boss. And that dream spreads like wildfire. But here's what most people miss while chasing those screenshots. Where's the money really coming from, and how long can it last? That's what we're diving into next. Real numbers, real risks. What 143% yield actually means. So let's cut through the noise. A 143% yield sounds amazing, but numbers without context are dangerous. Here's what that really means. If you invested $100,000 in MSTY right now, based on its current distribution rate, you'd expect about $143,000 in annual income. That's over $11,900 per month. Sounds great on paper, right? But now ask yourself, what's the catch? Because there's always a catch. That yield isn't interest. It's not magic. It's based on option premiums. Income MSTY earns from betting on the wild price swings of one ultra-volatile stock. MicroStrategy, which is basically a stand-in for Bitcoin. So if volatility drops, or if MicroStrategy stock tanks, you're not just losing the yield, you're losing your principal. This isn't a stable income, it's a high-risk income. It's the financial equivalent of walking a tightrope with dollar bills raining down until the rope snaps. Let's break down how this machine actually works. How MSTY works. Covered calls, options, and Bitcoin. All right, no jargon. Here's the simplest way to understand MSTY. At its core, MSTY is an ETF built to generate income through options. But not just any options, covered calls, on MicroStrategy stock, MSTR, which, as you might know, is basically a Bitcoin proxy. That stock moves wildly because it's tied to the crypto market. MSTY doesn't actually own the stock. Instead, it uses a complex web of derivatives, call and put options, to mimic MicroStrategy's movements. It sells the right for others to buy MSTR at a certain price, and in return, MSTY gets paid a premium. Those premiums are then passed on to you, the investor, as dividends. The more chaotic MSTR is, the juicier those premiums. But if volatility dries up, or if MSTR crashes, the income drops, and your investment can take a serious hit. You're not holding a business. You're holding a strategy, It's a clever system, but clever doesn't mean safe. To show you how this plays out in real life, let me introduce two types of investors. The Sarah versus Mike case study, growth versus income. Meet Sarah and Mike, same age, same goal, same starting capital, $100,000, but very different approaches. Sarah sees the MSTY hype, does her homework, and decides to go for the income. She locks in monthly payouts and watches the cash roll in. Over $90,000 in 1 year. She's thrilled. It feels like she hacked the system. Mike, on the other hand, takes the long view. He invests directly in MicroStrategy stock, the underlying asset MSTY is built on. No monthly income, no fancy distributions, just raw growth potential. Fast forward 1 year. Mike's investment? Up 140%. His $100,000 is now $240,000. Sarah? She made solid income, but her investment hasn't appreciated nearly as much. In fact, by the time you factor in MSTY's fees and NAV changes, her total return is around $193,000. Good, but not Mike-level good. The lesson? MSTY gives you income now, but it trades away growth. If the market surges, you're stuck watching from the sidelines while others ride the wave. And that's assuming everything goes well, because now it's time to talk about the hidden problem most investors miss, until it's too late. NAV decay, the hidden threat. Here's where things get real. MSTY's biggest risk isn't just volatility, it's NAV decay. That's short for net asset value, basically the true value of your investment. And over time it can erode. Quietly, relentlessly. Think of it like this. Imagine owning a house and every month you sell off pieces of the walls to pay your bills. It works for a while, but eventually there's not much house left. That's what can happen with MSTY. You're getting juicy payouts, but the core of your investment is shrinking underneath you. In some yield max ETFs, we've already seen this happen. NAVs dropping 30%, 40%, even 50%. While investors cheer on high dividends, not realizing they're just getting their own money back. It's the classic dividend trap. High payouts that feel like profit, but actually come from your own capital slowly bleeding away. And once that NAV drops far enough, no amount of monthly income will make up for what you've lost. It's like scooping water out of a sinking boat and not noticing the hole at the bottom. The Bitcoin dependency trap. Why MSTY's future isn't in its own hands. Let's be real, MSTY isn't just an ETF. It's a high-yield machine tied to the mood swings of Bitcoin. Because remember, MSTY feeds on volatility in MicroStrategy stock, which mirrors Bitcoin's behavior. That means your investment isn't really about MicroStrategy, the company. It's about the price action of crypto, whether you like it or not. So ask yourself this. What happens if Bitcoin gets boring? If Bitcoin stops making big moves or worse, slips into a long bear market, MSTR's volatility tanks. And when that happens, MSTY's strategy breaks down. Option premiums shrink. Your monthly income dries up. The fund has nothing left to distribute and your payout expectations get crushed. You don't control Bitcoin, you don't control MicroStrategy, and MSTY is just along for the ride. That's the trap. You think you're holding an income asset, but really you're betting on crypto volatility. Let's look at what that could mean moving forward. Two possible futures for MSTY and how to tell. Which one we're heading toward? There are only two directions MSTY can go. And your outcome depends entirely on which one becomes reality. Scenario 1. Bitcoin keeps booming. MSTR stock stays volatile. Option premiums stay high. MSTY pays out fat dividends every month. NAV holds steady or even grows a bit. Everyone's happy. It's the dream scenario, and for early adopters, it's been working. Scenario 2. Bitcoin cools off. Volatility fades. Premiums dry up. Monthly payouts shrink. NAV starts to decay. Suddenly the numbers don't look so good. And the people who jumped in late? They're holding an asset that's bleeding value with no cushion left. Now, here's the key. You can spot which scenario we're heading toward by watching three things. Declining option premiums, shrinking monthly distributions, steady NAV erosion month over month. If you see those three signals at once, that's your exit cue. But most people won't watch. They'll stay distracted by the income. Don't be one of them. Investor red flags to watch for when it might be time to get out. If you're already an MSTY or thinking about getting in, This part is non-negotiable. You need to know the red flags. Monthly payouts drop without warning. If your $12,000 a month suddenly becomes $6,000, that's not a blip. That's a signal. Second NAV is quietly sliding lower every month. It won't crash all at once. It decays slowly. And by the time you notice, it might be too late. 3. Crypto is sideways and sentiment is cooling. If Bitcoin starts trending flat and the headlines fade, that's a direct threat to MSTY's core strategy. 4. You're tempted to go all in. If you're thinking about leveraging your home or dipping into your 401k, stop. That's not smart investing, that's desperation wrapped in yield chasing. If you spot 2 or more of these at once, it's time to reevaluate your position. No investment is worth gambling your future on. Who should actually consider MSTY and who absolutely shouldn't? Let's be clear, MSTY isn't evil, it's just not for everyone. You might consider it if you're in your 30s or 40s with stable income. You can afford to lose a small percent of your portfolio. You understand options, crypto, and volatility. You're using MSTY for income only, not long-term wealth building. You have a clear exit strategy, but you should avoid MSTY like the plague if you're retired and need reliable income. You're new to investing or don't understand options. You're tempted to put in more than 5 to 10% of your net worth. You believe high yield means low risk. MSTY is a tool, not a ticket. Used smartly, it can deliver cash flow. Used blindly, it can destroy capital. Alternatives to explore, safer routes to passive income. If MSTY feels too hot to handle, and for many it is, there are other ways to build passive income without sleeping next to a financial grenade. 1. Dividend growth stocks. Companies like Johnson & Johnson or Procter & Gamble don't yield 12%, but they offer reliable growing income over time. 2-point REITs. Real estate investment trusts like Realty Income O offer monthly income with real assets behind them. 3. Covered call ETFs on blue chips. Funds like JEPI or QYLD also use options but on less volatile stocks. Lower yield, lower risk. 4. Short-term bonds or T-bills. Not exciting, but right now you can get 4 to 5% yields safely while you plan your next move. 5. Building your own income stream. Whether it's a side hustle, skill monetization, or digital assets, nothing beats income you control. The point? You don't have to chase the highest number to build wealth. You need to chase the right number for your risk tolerance and your goals. So, where does MSTY really stand? Is it a dream? For some, absolutely. It can generate serious income, fast, but it comes with strings most people don't see until it's too late. Is it a trap? For those chasing yield blindly, yeah. If you go in expecting guaranteed income without understanding the risk, MSTY will humble you. Fast. But is it a tool? That's where it gets interesting. Because for informed investors used in moderation, MSTY can serve a real purpose. A tactical play, not a long-term plan. Here's how you decide if it fits your goals. Do you understand the risk behind the yield? Are you okay losing part or all of what you put in? Is this a bonus income strategy or are you betting the farm? If you can answer those questions honestly and MSTY still fits, then fine. But if you hesitated, it's probably not your move. Financial freedom isn't built on shortcuts. It's built on clarity, strategy, and playing the long game. Now I want to hear from you. Have you invested in MSTY or thought about it? What's your experience been like? Have the dividends delivered? Have you seen the NAV dip? What's your long-term take? Drop your story in the comments, not just for me, but for everyone else watching. Because this isn't just a one-way video, this is a community of people trying to build smarter futures. And your voice could help someone make the right choice. I read every comment, so let's talk. If this breakdown opened your eyes, here's what I want you to do. Hit that subscribe button. At Golden Goals, we cut through the noise and give you real talk about risky plays, hidden traps, and smart strategies to grow your money. No hype, no fluff, just the stuff you wish someone had told you earlier. New episodes drop weekly. So if you're serious about building wealth and you want someone in your corner to help you think differently, join the crew. Tap that bell so you never miss a moment. And remember, chasing goals is good, but chasing them wisely, that's golden. Thanks for watching. I'm Mike. See you in the next one.